What's going on, guys? Hayden back making another brand new Crypto TV episode. Well, it hasn't even been a week into the new year and we're already starting things off with a bang. As if last year wasn't enough with the Feds cutting back on its bond buying and announcing 3 interest rate increases for 2022, they have officially dumped the crypto market not even a week into this year by revealing their minutes on the 5th of January, which showed that the Federal Open Market Committee, also known as the FOMC, is in favor of raising short-term rates sooner or at a faster pace than people had earlier anticipated. And all I'm saying is this could be setting up this year's crypto market for a lot of bloodshed if things don't level out pretty soon. And also, guys, let's not forget that this year we now officially have to claim all income above $600 made through payment apps. That means if you have Venmo or PayPal or even Cash App, they are now required to report your business transactions to the IRS. Keep in mind, this used to be anything over $20,000 last year in 2021, so they are really trying to get that bread from you middle-class hustlers. So keep that in mind next time you sell something on the internet. Oh, and that's not the only thing you guys should be claiming on your taxes. Remember, the IRS also wants you to claim your stolen property and drug dealing profits from 2021, which the Bureau's Publication 17 for the 2021 tax season states if you steal property, you must report its fair market value in your income in the year you steal it unless you return it to its rightful owner in the same year. And those who have also received income from illegal activities such as money from drug dealing must also be included in your income on a Schedule 1 or on a Schedule C if you're self-employed. So guys, if you're going to claim something on your taxes, it might as well be the like button. So go ahead and give it a quick press for the YouTube algorithm. This way YouTube will continue to push our videos to new viewers. Now with that, guys, out of the way, let's break down what exactly is happening this year so far. So guys, with the Feds revealing their minutes to the public, it is for sure a double-edged sword, as raising interest rates will actually lower the massive 6.8 inflation we had this year, which is a good thing because nobody actually likes outrageous gas prices, which I don't know if you have seen, but they've actually risen a whopping 58.7% on average for regular gas compared to a year ago at this time. So guys, in November of 2021, gas used to cost $3.49, and that was only a couple of months ago, compared to $2.20 in November of 2020. And worst of all, Dollar Tree even revealed in a press release it will soon permanently increase the price of its products to $1.25. And the company assured that the change is not a reaction to inflation, but instead they actually said that the new pricing strategy will allow stores to carry products previously discontinued due to the devaluing of the US dollar, which means they are literally raising prices due to inflation. So guys, with the Feds planning on raising rates this year, we will see a chain reaction of events with people slowing down on spending and beginning the process of saving. So we'll probably start to see some interest rates rise in regards to savings accounts, but this will eventually lead to sell-offs, which we're currently seeing within growth assets and technology stocks and even cryptocurrency. Now guys, the biggest thing you guys need to understand is the more that crypto gets adopted by mainstream and big businesses, the more we will see crypto react like the stock market to economic world events and of course, America's financial system, since the United States will become the global crypto and blockchain leader if they aren't already. So guys, remember, it's not just us small guys anymore moving the market. We have to actually keep our eyes on big money movers like Grayscale, which hopefully you guys know is a Bitcoin trust that ordinary people, just like you and I, can buy and sell in their own brokerage accounts, as well as many major tech companies owning cryptocurrencies like we have Tesla, Nike, and even Adidas that either offered their products in exchange for crypto, or they actually created and sold their own NFTs to get a stake in the market. And what's even crazier is we had companies like Tesla that just outright bought cryptocurrency too, a whopping $1.5 billion in Bitcoin to be exact. And the reasoning, at least this is what Tesla said, is they did this to get more flexibility to further diversify and maximize returns on their cash. And they definitely did just that, with analysts estimating that Tesla made about $1 billion in profits just on its Bitcoin investment. That literally means that Tesla's first quarter results show that it made more profits in the first 3 months of 2021 with Bitcoin than it did with its car business. How freaking crazy is that? Now, these sales tactics actually allowed big businesses to accumulate a lot of stake in the crypto market, like Ethereum from NFT sales or just outright buying Bitcoin. And we know that those two really influence the entire market and all the altcoins below it. So when the Feds or the IRS put out news that directly affects big business, it can then affect cryptocurrencies since it is now tied together. Hopefully you see that now. So with the Federal Reserve actually adding onto their previous December announcement by releasing these minutes, minutes, which for those that don't know, they are an official record of actions they took at the meeting. And it's not actually a record of everything that was said, but just the key points, or like the highlights. So basically, those highlighted points reiterated a sooner or faster paced decrease in bond buybacks and a faster increase in interest rate hikes this year than people had originally anticipated. So with this in mind, guys, when the Federal Reserve decreases its bond purchasing, it directly affects the stimulus checks our economy received by lowering the amount given out. So remember, last year, because of the pandemic, the Feds actually bought bonds, and by doing so, it actually increased the money supply in the economy. Also, in the same way, raising inflation to 6.8%. And by swapping out these bonds in exchange for cash to the general public, that actually created that stimulus. And it makes sense that they did this because we saw the pandemic crash the crypto market in 2020. So they needed to create some sort of way to inflate the market back up. So to fix it, what they did was the Feds bought a lot of bonds, and we saw our stock market shoot up to all-time highs, which we're all so happy to see, as well as cryptocurrencies too, which actually hit all-time highs, with Bitcoin closer to like $68,000. Now, the Feds got exactly what they wanted. With everyone getting all the stimulus money and lowered interest rates, they managed to actually artificially drive economic activity. And this kept the economy afloat, even though unemployment was at an all-time high, reaching 14.8% in April of 2020. You don't normally see an economy doing extremely well with extremely high unemployment. It's usually the other way around. And the crazy thing is, when employment was at 14.8% in April of 2020, it was actually the highest rate observed since data collection began in 1948 in regards to unemployment. Now, conversely, this year, if the Fed sell bonds, which it already said they have plans to do, then it will decrease the money supply by removing cash from the economy. And it also has the same effect when lowering interest rates, which increases the money supply and the economic activity, or the opposite, raising interest rates, which they plan on doing, which decreases the money supply and the economic activity as direct manipulation. So you can see how the Feds have control over inflation as well as the amount of money given out to our economy. So when this happens, tech stocks compete with bonds and interest rates, which indirectly affects the profits like Nike and Tesla, and therefore affects cryptocurrency because we know they hold a lot of it and have a major influence on the market. Now, that means that the higher interest rates go, the lower the present value of that company's future earnings are. And when that happens, higher interest rates can hurt tech companies with high valuations based on future profits. And higher interest rates means that earnings years from now are actually worth less than they are today because of that interest. Now, tech stocks normally have rapid growth assumptions built into them. So instead of cash flows that would always be, let's say, $1 million, for example, many would have expectations of growing to 10%, 20%, or 30% or more. And in this case, a rise in those rates would eat into the present value of the investment even more. So for example, I'd be like, hey guys, our company is projected to make 10% a year more every year for 5 years. And that would be their pitch in Shark Tank to get people to invest into their company. Now, assuming a 2% interest rate, the present value after 5 years would be about $6.3 million. But with the Federal Reserve having plans to raise the rates even higher this year, we can tweak that interest rate to maybe 4% or 6%, whatever the number ends up being. And their numbers actually go down dramatically, causing them to potentially liquidate some of their positions in cryptocurrency or selling it entirely with the expectation of raising rates this year. And this is pretty much the reason why tech companies and cryptocurrency will be the first affected this year, because crypto is without a doubt a risky investment for you and I. And now imagine being a corporate company owning millions of cryptocurrency. It makes sense that they would liquidate or sell their positions because it is extremely risky to hold. So guys, that's why tech companies relying on future cash flow growth experience extremely high risk as rates rise. And in other words, when interest rates go up, tech companies are more prone to having their stock prices drop. And now on the other hand, they will usually tend to flourish as we've seen when rates fall. And this has always been something that has really driven returns in the stock market. And that is why some parts of the market, like let's say the NASDAQ 100, which is heavily weighted in tech stocks, gets hit much more than the Dow Jones Industrial Average, which has less companies expecting outsized growth. So by now, guys, I've probably left you thinking,
well, maybe I should just sell all my tech stocks in crypto since you literally just said this year is going to crash.
But before you do that, let me tell you this. My plan for the new year is to do nothing. Believe it or not, just nothing, hold and buy these discounted prices. And I know that sounds crazy, but Fidelity actually did this big study on what kind of investors performed the best. And what they found out was that the accounts with the highest returns were classified as either dead or inactive. In other words, dead people do better in the stock market than living people do. And it's because dead people aren't always fiddling with their investment accounts the way living people do. And dead investors are the ultimate buy and hold investors, as they just stay consistent, and dead people as a rule are really consistent in their behavior. So with this in mind, the passage of time is what matters the most, and that's true when it comes to investing too. In other words, don't try to actually time the market. It's a fool's errand to try to anticipate the various booms and crashes that the stock market will inevitably go through. Instead, start investing as early as possible and focus on the long term, because at the end of the day, the timing of your investment matters much less than how much time you have to invest. The cost of actually waiting around for the perfect time to invest is much higher than just doing it, because you'll be missing out on precious long-term growth. And with all that in mind, guys, keep hodling, and I'll see you guys in tomorrow's video. Peace.